So today, guys, how to be a clever homeowner. Thanks for listening to the few people that have subscribed or people that have called in and asked questions. Obviously, this is something new that Mel and I have started this year. We're starting to better our craft and figure out the information that we can bring to people that aren't in our immediate circle, and better ways to serve our clients and the areas that we work, like Southern California.
I think the main thing here is that we wanted to give info, right, that makes people understand, allows people to understand the process of buying a home. Because let's face it, if you don't do this for a living, this can be very confusing, right? And frustrating at the same time. And then that makes you not trust people, right? So we want to give you the information straight up. No BS, no crazy fancy language.
Not without a back channel being, I'm worried about being monetized.
Yes,
right?
yes, absolutely.
That's the biggest problem, right? Is you could talk to a realtor and they say, hey, I really want to go see this house. Oh, well, and then they put you on a drip campaign and they're bugging the shit out of you for a year about buying a house, right?
Tons of people calling you nonstop, right?
100%.
There's no need of that.
You want to ask questions about a mortgage and, send a total stranger your social security card, your bank statements and W-2s, and all that kind of stuff is not needed, right? It's about providing real life information to normal people. And if Mel and myself are people that you think you can connect with, which is basically just two super cool dudes who are, amazing at what we do. Just a quick shout out, but it's honestly true. I've been doing this 26 years. My buddy here has been almost 20 years as a realtor. We got a lot of experience and we help a lot of families every single year.
Yeah.
And for us, this is something that we're passionate about. So.
Yeah, and today is going to be a quick show, end of the year, our last show for the year, right? We have a special bottle of wine. We're doing wine today, right? We did whiskey, right? We did beer. Now we're doing wine. This thing, we have some fun facts. However, we're going to leave it a mystery because there's a story about this wine in the back that we want you to read, right? We don't want to say too much. The only thing I'm going to say is it's a 50-year anniversary.
Tell them the brand so they can look it up.
It's called Caymus, right? You should be able to find this 50th anniversary bottle at your local high-end liquor store, right? Even maybe Bethmo might carry it. I called around. They do have it at some of the stores, so you should be able to buy Caymus, the 50-year anniversary bottle.
Mid, high price point?
I'm going to say lower to mid, because there's some really high-end stuff over there, right? Okay. This bottle should cost you anywhere, depending on the season, should cost you anywhere between $70 to $90, somewhere around there, okay? All right, so I'm going to pour this. Dave, you're going to go on what the show is going to be about, because it's going to be mostly based for you.
Yeah, so honestly, guys, today, like I told Mel, end of the year.
That's a big pour, sorry.
That's all right. I'll take it. It's Friday. So, end of the year. Right now, there's a lot of people that are sitting at home. They're ready to enjoy. They got Halloween out of the way. Thanksgiving just passed. You got Christmas coming up. And on my end of the market, I service everything. It's not only investors, but it's refinancing and how to, restructure debt, to give people a little bit more breathing room. And with that comes, seconds and home equity lines and all this other stuff. But on the side of the market for buyers, right, this is that time of the year where, the holidays are passing. Mm-hmm. My kid's going to have 2 weeks off of school. And, now we think we want to move next year. When should we get this process started, right? Because that's always the question. We get people that, right when summer starts, kids are off school, then they want to start the process.
Yeah.
And what we're kind of here to do is to kind of walk you through if buying a house in 2026 is maybe something that's on your radar. Maybe it was on your radar in 24 or 25, but I mean, shit, you could have said you wanted to buy a house in January and now it's December and you're like, where the heck did the year go?
Yeah.
And part of that process, guys, the reason time goes by so fast is because when you don't have a plan, right? It's just like if you're driving, if you're going someplace and it's 100 miles to get there and hey, I get on this freeway, I swap to this freeway, it's 100 miles and I get there. But if you don't got directions and you're just trying to figure out how to get from Whittier to Dodger Stadium and you just start driving, it could be 200-300 miles or hours of driving, and that's because
Yeah.
you get lost along the way.
Yeah, I mean, and also we notice, right? Rates are starting to drop a little bit.
Absolutely.
Right.
Yeah.
So what that does is, you know what it does? It makes you want to buy. Like, oh my God, the time to buy might be coming back, right?
Yep.
But however, that also brings back other families into the market.
Absolutely.
So competition is going to start to ramp up as we usually see.
Absolutely.
It used to be April. Remember, like 10 years ago, it used to be
Yeah.
like April. Now we're starting to see that people start come out to buy earlier. You smell that? Yeah,
That smells good. Sorry, I got sidetracked.
Oh my God! Yeah, it smells. The notes are really nice. People now, at least in Southern California, every market is different. I know this show is nationwide, probably worldwide, right? However, our market is highly competitive, right? So what that means is for us in Southern California, families start come out to buy properties now early February.
Yep.
That early, right? Other markets could be different. You got to check with your market. However, what that means is we have right now, if you watch this show, end of December to January, you have about a month and a half to get things rolling.
Absolutely.
Okay? Because what happens is, what do we usually see? When those families start coming out, right? Now competition is
Yep.
way up, right? So that house that is listed, let's say $450 or $650, now you're competing with other families. Now you're at $480, $680, right? So that is only going to drive the price up. Those rates might offset if you don't come into the market soon, meaning that rate that you really wanted, let's say 4.5%, let's just say, or 4%, right? That rate might not make such a big difference in your monthly payment if that home price just went up another 85 grand or 100 grand just in competition alone, right? Again, every market is different. Southern California, when people come out, you have to be ready to go up on that price. If the home is listed at 450, you have to be ready to be at 500, 520, right?
Yeah, and you know what that does, guys? Like as an example, we were just talking before the show started. We have a family, you know, they're looking to buy. And, you know, their biggest concern is they said, oh, you know what, Dave, we have the closing, you know, we got 10%, but, you know, we really feel more comfortable. We want to wait until we have 20%, an extra 10% down. Their price point's about $700, $750. So as an example, that's 70 grand, 70,000 bucks or $700,000, an extra 10% is 70,000 bucks, right? And I told them, look, you guys are the captains of your ship. So if you guys want to save an extra 70,000 for your down payment, that's fine. But let me show you what that looks like as far as numbers. Yeah. So on a mortgage, in general, every 10,000 bucks is going to save you 50 to 60 bucks a month, depending on the rate and how large your loan amount is. But in general, anywhere between 4.5% to 6.5%, it's between 50 and 60 bucks for every 10 grand. Mm-hmm. So you figured someone comes in, they're like, hey, I want to drop an extra $20,000 down on my house. Cool, it's going to save you $100. I want to drop 40,000 down. Cool, that's $200. I want to drop an extra, 70 grand down. Cool, that might save you, $300, $350. The problem with that, guys, is when the market shifts, we saw this in 2020 and 2021. You had families that wanted to wait. They wanted to put a little bit more down. Mm-hmm. Or they said, hey, the rates are at 3.2. I really want to wait until they get into, maybe the 2s until we start looking and make an offer. And what happens?
And those rates are not coming back, by the way.
And the market doesn't wait, guys. The market is what the market is, right? That's why we're always beating to the drum of the market, regardless of the market. Buying has nothing to do with the market. It has 100% to do with you. Mm-hmm. Has 100% to do with your finances, with your needs. You as an individual, because the market always shifts, it always changes, rates go up, rates go down. You can refinance, you can sell, you can upgrade, you can build on. There's 1,000 different things you can do, but at the end of the day, it's your finances that are making the payment. So it's 100% based on you as a buyer. But in the market, as an example, with this couple, what I told them was I said, look, you can wait and save an extra $70,000 bucks. But what happens if rates get down, middle of summertime? We know they're trying to drive rates back down a little bit. What if rates hit, right now, FHA is an example, it's about 5.1, 5.2 today at par. General rate, on a regular size FHA mortgage, 3.5 to 5% down. You're looking in the very low fives. Another change in the market, we could see rates at 4.99. What I could tell you is when rates hit 4.99, a bunch of people that are sitting there and going, I'm gonna wait. they hear that,
That 4.
they're all gonna leap forward, and they're all gonna start looking. Now, what happens is that house that say 700,000 today. When you get a seller that we make an offer on, what's the number one determining factor, Mel, on the closing cost or the type of offer we can negotiate and the benefits we get for our buyer? That's based on the seller receiving what? Offers.
Offers.
So-
In our market, even when it's slow, a seller or a home is going to receive anywhere between 2 to 5 offers. That is a slow market in Southern California.
Yeah.
Okay.
Now imagine when rates come down and now all of a sudden that same house you got 12, 13, 14, 15 offers on a property. What that means is everyone's competing. Starting price is 700. Next guy comes in, 705, 710, 15, 20, 25, whatever. You really want this house. Let's just say as an example, it ends up at 740. This house you could have bought when there was only 1 or 2 offers on the table. Maybe you offer 705 and you ask for 15 grand in closing, and the seller comes back and says, we have another offer at 705 and they only want 5 grand. So maybe you get this house for market price and you get no closing costs, but you paid 700 grand, or you got it at 705 and instead of 15 grand, you get 10. There's all these things you negotiate. The thing is with every offer that comes in is one less opportunity or one less thing that as a buyer you're going to get.
Yeah.
And a simple fact.
And also you have to think too is the type of offer and competition that you will have, right? Meaning that you could be that really good looking buyer, right, in the eyes of the seller, meaning you have a conventional loan, you put in 10% down, right? That is a really great credit. That looks like a really healthy offer, right, and buyer. However, when you have a pool of 5, 8, 10 offers, now your competition might look different, right? Yes, the majority of those offers might be FHA, 3.5% down, all that stuff, right? Cool. However, in that pool of 8 to 10 offers, I can almost guarantee you in Southern California that you're going to have at least 1 to 2 cash offers. Yep. So even if you are qualified, right, and you look good, you might end up losing out because you have a cash buyer out there. And that's because it's high season. These guys are shopping just like you are, right, for their next investment property, or they're buying cash for their son or daughter, whatever it might be, or second property. Yep. You just never know. But because you have a bigger pool of people looking, you're going to have way harder competition out there. However, if you are early in the game, we've seen this over 20 years now. Yeah. You're not going to have that kind of competition, so get ready. What we're trying to tell you is be ready to pounce early rather than later. And how you do that? Get pre-approved. Yep. It costs you nothing, right? You can get it done within a day or 2, right? You'll have your pre-approval letter. That doesn't mean you're going to go out and buy tomorrow. That means you're ready to pounce before anybody else.
And great. Absolutely right. And the key, guys, right, is when's the best time to look for a job? Best time to look for a job is when you have one and you don't need one.
Yep.
Right? Because you can go into an interview, you can ask the right questions.
Yes.
You can hold your head up a little higher, your shoulders are a little more relaxed, because this is an opportunity that if it's great or if it's good and it's something that you think is better, you can take advantage of it, but
puts you in the driver's seat.
But you're not pulling up going, oh fuck, I gotta get this job. If I don't, I'm everything's gonna collapse. So we tell buyers all the time, the best time to look for homes is when you're not in a rush.
Exactly.
100%, the best time to look for a house is when you don't have to.
The last thing that you want, now that you mentioned that rush, right? Yeah. We've seen this time and time again. When is that time? That's usually August. Yep. For us, right? Because families are looking to move before the school year starts for their kids. Absolutely. And they're rushing. That at the end is like, dude, we've been telling you since December to get pre-approved and start looking, right? And they wait until June, July. What happens is if you get into June, July, to let's say June, you get pre-approved in June. That means we're just starting to look mid-June. And it takes about a month month and a half to find the right home for you, and then another month to close escrow. So if you started in June, you're probably going to close escrow right before
It's crazy.
school time. Right before school time, and now you're moving into a brand new home, trying to set up the kids in the new school and all this other stuff. And let's not talk about the stress during the escrow process. Mel, is there any way we can move out the escrow closing date another week? I'm like, I don't think so, because there's people living in this home. You're kicking them out early, right? Yeah. There's so many variables there. But none of this matters if you're ready to look and you're pre-approved way ahead of time. Now you're relaxed. You take your time. You move. Let's just say the kids are not out of school yet, right? When do the kids get out of school? May?
Typically, yeah. I mean, May? Sometimes it's May, June, July, depends. But again, guys, the key is the prep work, right? I mean, it's kind of the same thing. If your spouse comes and says, hey, we're going on a family trip to Hawaii in July, and you're like, I want to look good for this trip. You start working out in December. By the time July comes, hey, you're feeling good, you're looking good. You don't wait like you're leaving on July 10th and July 1st you go buy protein powder and say, hey, I want to cut the diet. You're going to like zero change. And in finance, it's the same thing, right? Like our goal is to, like if you look at our Yelp page and other things, 90% of the reviews from people are going to be that they got so much information on day one that they got a headache from it, which is fantastic. And the second most popular comment that we hear is, I can't believe how easy that process was.
Yep.
And that's because we prepare people early. Usually the first time they meet with me and we start figuring out a price point, even if it's, hey, we're waiting for this or that, I connect them with Melvin. Hey, Mel, set them up on the MLS. Let them start getting, just let them start seeing what's available. Hey, I want to live in this city. Well, let's see if there's anything available in that price point. And if it's not, now you guys have a couple weeks or months to actually go and explore different counties and different areas and talk with the realtor, someone who's an expert that knows, hey, you know what? I know you guys really wanted to live here, but here's a neighborhood 10 miles outside of this place you never thought of that has just as good as schools and very similar amenities. Like, you can kind of start getting a taste for what's available. If you got things on your credit that you need to work on, we can go over that stuff right away.
And that saves you money on top of it, right?
Maybe you're like, hey, Dave, I have a new job opportunity. What is this going to do? Tax time's coming, and maybe, hey, you know what? I know we do our taxes. We're going to get a little bit more money back. Or you get your taxes done and you realize, hey, shit, I owe this amount of money. Okay, well, what would... we start figuring out, hey, well, if you had, mortgage write-offs or these other things and interest to write off, how would that affect you? Like, there's so many pieces of information that are so vital, especially at the end of the year, that, when you're ready, when you have an interest in buying is when you want to start talking to someone like Melvin and myself. And that's because, wanting to own a home and owning a home, there's people
steps.
and the first step is really just talking to a banker and saying, hey, I think I'm interested in buying a house. Shit, most people are. My response is like, awesome, when are you available? Let's get together. Let's get you some mortgage education. I don't care about your credit. I don't care about your income, none of that stuff. Let's just talk. Let me pick your brain. You tell me the type of payment you want to make. We can kind of go over what's involved in the mortgage process. What does $3,000 a month buy me, and what are the different types of loan? What the hell is mortgage insurance? What's homeowner's insurance? What's principal and interest look like on this? Like, it's an education process. And from that, what you get are two things. You get clarity. Clarity is such a valuable thing, right? And the second thing that you're going to get out of that is you're going to get empowerment. And by empowerment, what we mean, and me and Mel talk about that all the time, we want to empower buyers. Empowerment is basically giving you the information so that you can decide for yourself what's next. So if you're thinking, man, this summer I'd love to own a house, we want to move out of our apartment, we're sick of paying for someone else's retirement, and when you're paying rent, that's 100% what you're doing. You're either paying someone else's retirement or someone else's investment, right? And get the education now. Doesn't mean, like Mel said, doesn't mean you have to buy. Doesn't mean we got to look at your income and run your credit and do these things. But empower yourself with information. Talk to someone like Mel and myself. Mel can kind of educate you on, the different home types and areas and school districts and all this stuff. Because believe me, that's what this dude does. Me, don't ask me none of that crap. I'll tell you how my school is and my kid's district, but that's it. As far as that's concerned, that's his job.
Yeah.
You want a house, hey, I want something that's kind of like Pasadena, but it's way less expensive, right? Well, talk to this dude about it. All my job is to say, here's what the numbers look like. Here's what the credit looks like. Let me show you how we can make this work. And then his job is to educate you on where we can make this work. How and where. That's pretty much what our two jobs are. If I had to stick something on our name tags and says what is it, I'm how and he's where.
Yep.
But the sooner that you speak to a professional, guys, the better positions you're going to be. Sounds like a dumb cliche thing to say, but everyone out there is going to tell you, oh, you could wait or do this or do that. The day you got an interest, talk to a professional, start learning that stuff, and go through the holidays with the knowledge and the understanding that, well, maybe, you'll know right away, hey, owning a house this year is going to be something that's on my list, or, you know what, maybe it's a couple years out. And that's the gift you can give yourself is clarity and
empowerment.
And some empowerment. So, for us, we want to just come on and kind of just remind people holiday season's here. It's not a time to be stressed out. It's not a time to, to be worried about, I know so many people are worried about money and jobs and all these other things. And we hope that everyone out there has a beautiful holiday season. And for those of you that are in the market or thinking and want to possibly make that next step in your life in 2026, just like I said, man.
Yeah, I think holidays are over. Let's just say the holidays are finished up. Go do your taxes right away. Do your taxes right away. Yeah. Don't wait for it, right? Once you finish that, send it over to Dave, right? Make your appointment, come in, have a conversation, right? And he'll tell you the steps. You'll get all the information you need, and then you decide, hey, let's do the pre-approval now. It costs you nothing, right? It's completely free. You get pre-approved, and you're ready to go, right? And you'll know by the end of January where you stand, right? Yeah, how much home I can afford. Does that payment make me feel comfortable? Am I not going to lose my lifestyle, right? That kind of thing. Yeah. Am I still going to be able to travel, fix the home if you want a fixer? I wouldn't recommend that. I did a fixer. You did a fixer too, right? It was like, dude, just get the house already kind of done, right? Save yourself the headache. It looks cool in HGTV, but in real life, it's a pain. It's a pain in the butt, right? That kind of thing, right? So, Dave, how about we take a sip, because the smell is starting to...
I'm getting a little buzz from it.
Oh my God, it's so good. Cheers.
Cheers. That does smell good. Got a good oil ring on there.
Oh,
that's good.
That is really good.
I want a ribeye and some something with this right now.
Some spinach, cream and spinach. Oh my gosh, so, that is really good. Okay, the other thing that I wanted to bring in. So we saw the rates go down some this week, right? A lot of people started getting excited. I got excited, right? But you just told me this morning there's a new program. I kind of want to talk about that program a little bit, just real quick, because I got excited about it because it actually helps people like me, right? Business owners, people in between jobs.
Let's just say, there are products out there that they call it common sense underwriting, and most people try to do that. And there's products that fit everybody. But let's just say, there's a lot of people that have the means to pay a mortgage, but it's difficult for them to show those means. There's people that say, look, man, I do construction and I've been doing this forever, and I've never missed a bill ever in my life, and I've saved up money, and look at my credit. I've made my car payments and credit cards, and I got all this history. And or maybe you're someone that says, hey, you know what, I got some clients, hey, I lived in Fiji and I went to college there and I did 4 years and got a bachelor's degree, and then I came here and I got my permanent residence card and I got my social and I established my credit, and I really want to buy, but I can just tell you that there's options for you out there. There's programs, there's products, whether it's W-2s and pay stubs, or there's an entire market and so many opportunities and ways for people to qualify that it would blow your mind. So,
yeah, that new product that you showed me this morning,
and I'm not gonna
was
tell
really
everybody everything, but I can tell you this:
it's a little early, I feel.
if you're somebody who says, "Oh man, you know what? I have the means," well, just say this: you got a credit. You got credit that you've had a couple trade lines for 12 months, a couple credit trade lines for 24 months. You got pretty good credit scores.
You got money in the bank.
You got some money in the bank, and you don't think that just with those 3 things that there's a way to buy a home. I got news for you.
There is. I know. I saw it. I was like, wait, what? Just with those 2 things, and that's it. I mean,
there's some amazing products out there for people. So again, guys, the point of this message was we hope everyone has a beautiful end to their year, and just a reminder that life comes at you extremely fast. So if buying a house in 2026 is on your adult Christmas wish list, right? We're so worried about putting things under the tree for the kids and the rest of our family. Sometimes we put ourselves and our wants and needs, in the back, and that's okay. That's what parents do. That's what adulting means. But if owning a house is something that you want to do, empower yourself, connect with us, and let's empower you with the information so that we can make this year the year that you become what we call a clever homeowner.
Yeah.
And you start funding your dream and quit paying for someone else's retirement.
Yeah, I mean, and the reason why we did this impromptu show real quick is because we're seeing the trend of these.
Yep.
In 2026, it does look like those rates are going to start coming down slowly.
It's going to get real busy real quick, guys.
Yeah, and that's why we're saying it in December.
It's all ready, real busy, and real quick, but and we've been doing this a long time, but in the sense of the market in general, it's there's going to be a lot of people that weren't busy for a long time that are going to start getting busy just by the nature of where the market's going.
Yeah, you don't want to be the buyer that's scrambling to get pre-approved last minute, and then having to pay an extra $85,000 for a home. When the value says is a little bit less because the competition is going to be out there.
Yeah, you don't want to be the guy that goes and says, "Oh man, we really want to buy now. Kids are out of school. We got to do something in the next 2 months." And then you go and talk to someone and we check credit and you realize that, oh man, that Spectrum internet box that I returned, the box, I got a $60 collection on my credit and my score dropped 100 points.
Yeah.
What do I do now, right? Those are all the little things that we can fix, we can address, we can take care of.
Yeah.
If you're not sure, hey man, I don't know if I can afford this, I can afford that. Well, that's what we're here for. We're literally here to answer questions and provide you guys a service that not only is
yeah, I mean, I think you will get that answer, that side-by-side comparison, right?
Yep, 100%.
Would I pay this much? How much would I pay if my rate is at, let's say, 5%? Versus a price increase or having to pay above market value for the property at a 0.5% less in that rate. Trust me, you want that higher rate just slightly because you can refinance it later. You can't refinance those extra 80 grand that you had to put on top of that value of that home just to get into the home. Yeah. Okay.
Knowledge is power. Information is constantly changing, but that's what we're here for. We are tools. We're human beings, but we are real estate and financial tools that you can use. It doesn't cost you a thing except for time. And I'll tell you what, my time is extremely valuable because Elon Musk can't buy an extra day. Time is one thing that you can't buy back. And if you're sitting there in an apartment, that's nothing wrong with that. But if your dream is, man, I want to, have my kids playing in their own backyard, guess what? You can't get the 2-year-old or the 3-year-old or the 4-year-old or the 5-year-old back. And, if that's a dream or something that you want to aspire to get to, that's 100% what we do this for, is to help you figure out a way to get there. We hope everyone has a Merry Christmas. We hope you have a beautiful Thanksgiving. And so cheers to everybody.
Cheers.
Let's make 2026 your year.
And go beacleverhomeowner.com.
Yep.
click on that book my consultation, free consultation. You can schedule your own time, day and time.
Anytime, day,
and,
night,
and guess
weekends.
what? That goes straight to us right here, just us two. And you schedule that appointment directly with Dave.
That's right.
Okay.
Look
All
forward
right.
to meeting you. Have a
All
good
right.
day.
Bye,
Cheers.
guys.